Okay, so that should be being recorded now. And then if you look at, let's see where my e-learning went. I guess I have to reopen that. Sorry.
They updated my learning or e-learning or whatever it's called.
E-learning, yeah, it looks a little different now.
I was so confused because I'm already not used to it, and then they changed it, and I didn't know how to navigate it at first. But
Yeah, it's always annoying, and I always feel like all of these changes that they're constantly running us through, I'm never sure if they're helping us or hurting us. I know that their intent is to help us, but then I had a small fire drill and that they deleted all my Zoom meetings. But I was able to get a hold of the person that does that. She's pretty accessible. She was able to put them back. So that was good because if you had clicked on it earlier, you would have seen something that would have said, hey, you know, um, the meeting ID is not valid. But once you put them back, then you're able to click from here. So I'm just showing you couple things that I've put here for chapter 10, the final review file that we're going to be using is there. And then I'll talk about chapter 10 and then some of the other things from final review. And then I have a few slides that I think are, frankly, in my opinion, better than the way they've organized it in the final review book. So I decided to just use some slides for some of that stuff. So let me go ahead though and open up. Where'd my final review go? Sort by.
the final review is pretty nice. I went through the book,
Uh-huh.
and I went through like the lectures on like online, and then there's like one, I think there's two different guys that do it, because one guy is good and he like highlights and marks up everything, and then there's another guy and he sounds slightly different and he doesn't like mark in the lecture, he doesn't mark things up like the other guy does. But for the most part it was the other guy, so it was good.
I'm not, I mean, I'm not a fan of the final review lecture. So if you're finding them useful to you, that's great.
Sometimes
I,
they're
I
like
don't,
highlighted, pointed out, but some of the times they just like read through and it doesn't like add any value to it. So
yeah, again, I don't, it's up to each individual, I guess. It doesn't do much for me. Sorry, guys, I'm having trouble finding what I wanted. I didn't want that. Um, this is indicating to me that it's already opened. And for some reason, though, I'm not seeing it when I look in the. Okay, well, I'll tell you what I'm going to do rather than fight all that. I'm just going to open it because somehow I managed to put it up in e-learning. So it was there for that. So I'll just go with the flow and open it from e-learning because I did put it there. Okay. And then I guess it's going to force me to download it again. It begs the question, well, if it's there, why am I not seeing it when I open that file? Come on, this is ridiculous.
this is what you uploaded on My Learning is the actual review book, right?
Correct. I'm just not understanding why it is not letting me show it. Final review, final review for our class, save. That is telling me that it's there. But I don't want it there. I want to see it in the actual file. So let me try it from here, I guess. Okay, good. Okay. And then view full screen. And then unfortunately, the way we need to do this, it's kind of a pain, but we need to basically do this massive scroll through all the chapters because it's just not organized where I can find it by page. So I have to go down quite a bit here because the numbering in the software doesn't necessarily correspond to.
Yeah.
Okay.
Yeah, it's all mixed up. But all the governmental stuff is the last section, or the last two sections.
Right. Okay, we're almost there. Sorry, guys. Okay, so I guess it's section 4, page B1. Okay, if you're trying to turn to your final review book. So you have to turn back to section, it's the last section, I think. No, second to last section. Section 4, page B1 is where we're going to start here. Okay. And basically, what this information is all about here is the part that we didn't get to talk about after I went through the rest of the funds. I talked about the proprietary fund, and I talked about the fiduciary funds, and then I didn't get to the discussion of the government-wide financial statements in chapter 10. So I want to pick that up, and I'm going to do it from the final review book at this point, since we're kind of going to be going back and looking at some other stuff from previous chapters in this final review. Okay. Now you don't have to memorize standards by number. Okay. But it's worthwhile to know that GASB has talked about how government should prepare their financial reports, and that there should be 2 levels of reporting, both government-wide and the fund financial statements. And we talked quite a bit in F9, part of F10, about the fund financial statements. So what we're going to do now is start to pick up, well, what is the basic reporting model for all state and local governments? Okay, so again, we have the government-wide statements, we have the fund financial statements, and we have the notes there too. That is called basic financial statements. And then we have required supplemental information. Now, I'm not sure why they didn't reproduce a very helpful visual here that the GASB came up with. For some reason, they left it out of the final review, but it's pretty easy for us to reproduce it right here. Okay, so we have something called a management discussion and analysis, and that is the first thing you see whenever you pick up a basic financial reporting package of a state or local government. Now you can go ahead and write RSI next to that. That stands for required supplemental information, and I'll give you more about that here in a couple seconds. Okay, then you have this next piece, and this next piece is called basic, and I'm putting FS for financial statements. Now, when you look at the basic financial statements, we have the government-wide statements, and we have the fund financial statements. Okay, I'll just put government-wide and fund. Okay, and basically this arrow pointing back and forth shows that we will need to reconcile between the government-wide level and the fund level. And then down here at the bottom, you would have the notes to the financial statements. All of that is considered the basic financial statements. That's the second thing that you see when you pick up the financial reporting package for any state or local government. And then you have this bottom box, and this bottom box is the third thing you see, and this is required supplemental information. And I never leave myself enough room in this box because I guess Gatsby gets paid by the word here. Required supplemental information other than the MD&A. So that means that this bottom box is required supplemental information, and the MD&A is required as supplemental information. Both of these are considered RSI. The only difference is that the MD&A comes before the basic financial statements, whereas this bottom box comes after the basic financial statements. So if you look at this thing, everything on this model is either required supplemental information or the basic financial statements. They're only falling into two groups. So if it's required, that means that what? All state and local governments have to provide this information. And the S, the supplemental, means that it supplements what? It supplements the basic financial statements. So the MD&A talks about information that's in the financial statements, and the required supplemental information other than MD&A isn't a written prose like an MD&A is. It's more charts and whatnot that help, and information that help explain, financial reports and whatnot, like a comparison between budget and actual that help amplify on the financial statements. Okay, so every state and local government has to provide this in MD&A. The basic financial statements, which constitute the government-wide statements, and the fund financial statements and the notes there too. And then there's this bottom box, required supplemental information other than the MD&A. Okay, now when we talk about the government-wide and the fund statements, let's just go ahead and kind of point ourselves down here. Okay, and so we have two levels of reporting. We have the government-wide statements, okay? And when we report the government-wide statements, we have two columns. We have government activity, and we have business activity. Now, when we prepare information for our government-wide, we use accrual accounting, full accrual accounting. Okay, we use full accrual accounting. Then, of course, we also have our fund financial statements, and we spent, a fair amount of time with those in F9, in which we sit here and we have our general fund, special revenue fund, debt service fund, capital project fund, permanent fund. Those are governmental funds. There are 5 of those: general fund, special revenue fund, debt service fund, capital project fund, permanent fund, the mnemonic GRASP. Then we have our proprietary funds. And there were 2 of those. Okay, we had what? We had our internal service fund and our enterprise fund. And then I'm forever damned being stuck in a corner to write the last, no matter how hard I try to give myself room by writing over there, I'm going to end up squeezing it in here. And we have our custodial fund, our investment trust fund, our private purpose trust fund, and then the pension fund. KIP had two P's in it, okay? And those are all of our governmental, all of our funds, I should say, okay? Now, we remember use modified accrual. Okay, modified accrual for our governmental funds, and then for our proprietary funds and our fiduciary funds, we used accrual, right? It says accrual. Okay, all right. Now, what we do is we take our internal service fund along with our general fund, special revenue fund, debt service fund, capital project fund, and permanent fund, and we basically consolidate them into the governmental activities column on the government-wide statements. Then we take our enterprise funds, and a government could have more than one enterprise fund, and we consolidate those into business type activities. So again, we consolidate into business type activities. Now, the fiduciary funds, you can put here, are not consolidated. They are not consolidated at the government-wide level. The reason being that at the government-wide level, we have an operational accountability focus. And an operational accountability focus is basically showing how effective you use your resources to run this entity, in this case, a state or local government. And these fiduciary funds do not belong to this government. If we're talking about the pension, those pension assets belong to the employees and former employees of this government, and they're not supposed to use those in their day-to-day operations. So because at the government-wide level, we have an operational accountability focus, we don't consolidate those at the government-wide level. We do consolidate the governmental funds and the proprietary funds. The governmental funds plus the internal service fund go to governmental activities. The enterprise funds go to business type activities. Now, the reason we take a proprietary fund like an internal service fund and group it with the governmental funds at the government-wide level is because the customers of the internal service fund, remember we said, are what? Are the other governmental funds. So that's really all the governmental type activity, and we stick it all under government activities. The enterprise funds pretty much are being run by what? Being financed by user charges. Since they're being financed by user charges, that's more like a business activity, and Gatsby has indicated that we put that under the business type activity. Now, what happens? Well, we've got a little bit of a problem in how we're going to have to show users the relationship between the government-wide statements and the fund financial statements. Remember, I had that little arrow there, okay? So let's say I purchased equipment for cash, and let's just say I purchased that out of the general fund. What would be the journal entry at the fund level for that expenditure? Let's say I spent $1,000 on a piece of equipment out of the general fund. cash, $1,000 cash. I mean, that's a question.
You would
Yeah.
credit the cash and then it would just be like expenditure. You wouldn't have the car.
Good. Good. Okay, so it's truck, whatever it was, right? I'll debit expenditure for $1,000. Okay, good. Now I need to basically record that at the government-wide level as well, because I am going to have to record government-wide statements as well, right? So what would be the journal entry, do you think, here for my, if I was trying to record this at the government-wide level using full accrual accounting? Well, I still need to credit cash, right?
Yeah.
Okay, and if I'm using full accrual accounting, would I treat it as an expenditure?
No.
No, I would have to say what?
That it's like a piece of inventory or an asset.
Okay, well, equipment's not inventory. Inventory is something that's held for resale, but it is equipment, right?
Yeah, sorry.
Equipment. Okay, good. So I go ahead and I debit equipment and I credit cash. Okay, good. Now, what happens? Well, now what they require is that I prepare a reconciliation. And there's two reconciliations I prepare. Okay, this is going to be reconciliation number one that I have to prepare. And so before I do the reconciliation though, let me go ahead and do my general fund balance sheet. And let's say I had $1,000 cash and I spent it all on equipment. That was all I had. That was the only asset I had. I had no liabilities. I had no fund balance at the beginning. So I spent $1,000 cash on equipment. I had $1,000 cash I spent on equipment. So how much cash do I have? On my balance sheet? I had $1,000 cash. I spent it all on equipment.
We have no more cash.
Good. And then I don't report any long-term assets at all. My current liabilities, my liabilities are zero. If my cash is zero, my assets are zero, my liabilities is zero, what's my fund balance? Not a trick question.
Zero.
Zero, good. Okay, now at the government-wide level, my cash is what? Zero, but now I have what? Now I have equipment because I'm under full accrual accounting and I am going to be reporting long-term assets, right? So I have equipment for 1,000, okay? My liabilities, I'm saying, are zero. This is the government-wide. So, and what we call the equity at the government-wide level, we call it net position. So if I have what, equipment of 1,000, no liabilities, no cash, what's my net position, which is like our equity, like our retained earnings at the government-wide level? This is equity, like retained earnings. What's my equity going to be, my retained earnings? Cash is, huh?
1,000?
Good. Now I'm going to have a net position of 1,000. Excellent. Okay. Now, if somebody is looking at what? Looking at my general fund balance sheet and looking at my government-wide, that's a balance sheet. They call it statement of net position. Okay. If someone is looking at those statements, they're having trouble understanding the relationship potentially between these two, because they're sitting there and saying, well, I see one kind of retained earnings equity item showing 0, and I see at the government wide level $1,000. So what's the connection between those? So what we would do is present recon number 1. And the reason I'm calling it recon number 1, because there's 2 reconciliations. One reconciles the balance sheets, the other reconciles the income statements. But let's just focus on this balance sheet one right now. Okay, and we would start with fund balance on this reconciliation. Our fund balance is how much?
0.
0. And good. And we would reconcile the net position. And we know our net position, just pulling it down, is what? Is 1,000. And then we would simply explain what happened. And we would say, hey, and they write more than this. I'm going to kind of speak like a Neanderthal man here and just say equipment. Okay. They would say equipment is reported at the government-wide level, but it is not reported at the fund level for governmental funds under modified accrual accounting, blah, blah, however they explain that. And they would simply show that the equipment is being added back. And now this thing reconciles, doesn't it? Okay, so someone can sit there and say, oh, okay, now I see the connection between the fund financial statements and the government-wide statements indicated by that arrow, double arrow there, because it basically is showing how the two relate. Now, in this example, I said, well, I only had, the situation here with this, no liabilities. What would happen if I had a $500 long-term liability? Well, if I had a $500 long-term liability, then I'd take the equipment minus my long-term liability. Okay, then I'm kind of writing in there 500. That would then give me a net position of not 1,000, but what? Of 500. If my net position is 500, then I would simply report the long-term debt. And again, I'm just kind of speaking like a Neanderthal man. Again, it would say long-term debt is not reported at the fund level under modified accrual accounting, but it is reported at the government-wide level under full accrual accounting. Subtract the debt, right? Assets minus liabilities equals equity. Net position is what we call it here. And again, the thing reconciles. So users of the financial statements can look at these reconciliation to understand the difference between the 2 levels of reporting that we have to provide. Okay. Okay, good. Now, what I want to do, I'm forever damned by not being able to read my own writing. Okay, but put down here now, see page 9. Okay, and it's B9, I guess, just to make it clear. See page B9. Okay, and what I want you to do is just go over to that page B9, just flip over a couple pages. A lot of this stuff that I'm going by, guys, we already covered in F9, etc. Okay, we'll come back to some of these things, but I just want to go and look at page B9 for a second. Okay, and Becker's name is Tom. Tom Cox does a great job putting together sample financial statements. Okay, I don't see anything better than this anywhere in industry, textbook industry. Generally, what textbooks do is they hurl the financial statements of the city of Denver at you and say, there's an example. Meanwhile, it's very hard to learn from something that is that detailed and that high level, okay, where this sort of breaks things down for us very simply, okay? So notice now this is the statement of net position, okay? Let's just make ourselves a couple of notes here. This is what? This is the government-wide. It is the consolidation of the fund financial statements, okay? And it is what? What type of accounting? Full accrual that they're using here, okay? And you can see that because there's cash, there's long-term assets, there's short-term assets, non-current, short-term liabilities, non-current liabilities, and then there's this net position. Net position is LIKE, like the retained earnings. So this is the government-wide statements. We didn't look at these when we were talking about chapter 9, and I didn't get a chance to get to them in chapter 10, okay? So when you look now, you have those two columns that I described to you earlier, governmental activities and business type activities, okay? Now, for our governmental activities, we have consolidated in there, general fund, special revenue fund, debt service fund, capital project fund, permanent fund, plus what? Plus the, and I'm going to put ISF for internal service fund. In the business type activities, we have what? We have the enterprise fund. Where's KIP? The fiduciary funds are not reported at the government-wide level. Okay? All right, now you come down, and I'm just going to first look at the business type activity column. Okay? And when you look at the business type activity column, you see that number 1,835,000. Okay. And so I'm going to ask you now, oh, you can't do it. Okay. I'll show you this somewhere else because they didn't include all of the statements here in the final review book. I'll show, but I think that other, I may not be able to show it to you here. Let me explain it to you. Come on, Tom, just put the statements in there. Okay, what happens here is we would take our enterprise funds, if we had 2 or 3 different enterprise funds, and we would simply add them together so that they tie to that 1,835,000 number. So if you had more than one enterprise fund, you just roll them up and consolidate them to this government-wide number, and I'm focusing on net position. So it's basically consolidation. For governmental activities now, circle this 3,730,000 and go ahead and put C, page 11, okay? And when you come over now to page 11 now, okay, now we're sitting here and we are looking at our governmental funds. We're looking at our governmental funds, and we're looking at the balance sheet for the governmental funds. And when you come down to fund balance, just coming down to the total fund balance, notice the total fund balance is what? 4,195,000. Well, that's different than what? 3,730,000 that we saw on that other page, on page, wherever we picked it up from, on page 11, I mean, excuse me, page 9. We're on page now. Yes. Hello?
Oh, I say page 9.
Yeah, page 9 where we got it, okay? And so, in fact, thank you. Why don't you go ahead and put C, page 9, so when you look back later, you can kind of see where that number came from. So what they do is they go ahead and they start with fund balance and they reconcile to net position, okay? And this is that Recon 1, a little more sophisticated than the one we had before, but certainly it is starting with fund balance and going to reconcile to net position. And we saw that, not on page 9. Come on, John. We have to, what? This was the one that we see on, what'd you say, Anna, it was on page 9? Right? Is that same number?
Yeah, the 3730.
Right, same number, right?
Mm-hmm.
Okay, good. So you see here, page 9, we reconcile up to that number. Now let's take a look at the nature of some of the things that are here that's going to allow us to reconcile. What do? They take capital assets and they do what? They add them. They take what? They take long-term liabilities and they do what? They subtract them. So far, same exact thing we did in that little example I showed you a minute ago, just bigger numbers, right? Okay. Now let's take a look at these other couple things here. Here they say what? They say long-term assets not available to defray costs of current expenses not reported in the fund financial statements. So that's a horrible example. What I used to think this 125,000 was, and I apologize for not looking at it more carefully. I don't know why he came up with this. My friend Tom does a beautiful job putting together these financial statements, but every now and then he goes off the edge into dorky governmental accounting and can't seem to stop himself. Okay, so don't worry about that explanation. Pretend this was an explanation of a situation where we were able to report revenue at the government-wide level, because it doesn't matter if you collect things within 60 days. Remember that whole discussion? So we took it as revenue at the government-wide level, but at the fund level, because we would collect this money more than 60 days after the year end, we treat it as deferred inflow. We left it on the balance sheet under modified accrual accounting. Well, you would go ahead and do what? You would add that amount back in, because you're essentially saying, well, look, I would have taken that into revenue, and since my net position is like my retained earnings, it would have been included in retained earnings, so I would have had to add that back in. Then the other thing they do is go ahead and pick up the net assets, net position, I should say. They pick up the net position of the internal service fund. And think about that. Internal service fund, when we're down here at the fund level like we are, is being treated as a proprietary fund, not a governmental fund. Meanwhile, when we do the consolidation, we include it with the governmental funds under governmental activities. So they go ahead and they add back the net assets of the internal service fund. And when they do, this thing reconciles. Okay. Question. Okay. Now let's go ahead. You're sure there's no question. And let's go back. Okay. And let's just look at that example financial statement there, which was my balance sheet, my statement of net position, right? Which is like the balance sheet for my governmental funds, okay? And that is one of the two statements that are prepared at the government-wide level. We have a statement of net position, which is like the balance sheet. Written so many things in here now. Just put over here LIKEBS, like the balance sheet, okay? And then you come over and you have this second statement called the statement of activities. Again, this is the government-wide version of the income statement. It is like the income statement. So we have a balance sheet, we have an income statement at the government-wide level. We don't call them that. We call it statement of net position. We call it statement of activities. Okay. Again, We use accrual accounting here. And it is what? It is a consolidation. So notice we follow the same kind of format in that we show you governmental activities, we show you business type activities, okay? What goes into the governmental activities? General fund, special revenue fund, debt service fund, capital project fund, permanent fund, plus what? Plus the internal service fund. That's the S there. That's an S. Okay. The C and CPAPI, the S and CPAPI, internal service fund. Okay. And then for our business type activities, we have what? The enterprise funds. Again, we don't consolidate the proprietary funds. Okay. And let's just take a look and see if we understand the mechanics of this thing. So I'm just going to focus on this public safety. Okay, remember public safety, we talked about public safety or the types of things that governments do, like they have the fire and police department combined to carry out the public safety function. And what's interesting about this statement of activities, you don't get too far on this income statement and they immediately start reporting expenses to you, both direct and indirect expenses. And then they have this section over here called program revenue. And program revenue, charge for services, you can put an S there, operating grant, put an O there, capital grant, put a C there, okay? And these program revenues, you can sock them away, okay? You can sock them away. Basically, what program revenues do is they defray the cost of these various programs. So notice that this government was able to do what? Generate $78,000 of program revenue. So if you take the $1,025,000 plus the $35,000 of indirect expenses that were allocated here, after you consider these program revenues, this government spent $982,000 on these on this program public safety. Now, charge for services might be things like speeding tickets are considered a charge for service. I think that's a misclassification because I don't get a speeding ticket and say, oh, thank you, thank you for your service, right? But let's say they made you pay a permit to have police coverage on a parade or something. Okay, well, that might be considered charge for service. Okay, operating grants, there's a lot of controversy about this now, but the federal government does provide funding to state and local police departments to cover things like police salaries. And where the real, they say defund the police now. And to me, just my own personal opinion, where they could really take a good look is, do we really need to provide police with military style equipment, things like, drones and tanks and all these different things that the federal government would help provide funding to state and local governments to acquire. I half the time say, no, don't provide funding for that. But then I see something like a mass shooting and I see police having to go in, and they do kind of sometimes seem to need things of that nature. So it's a controversy as to whether or not they need this money for capital type grants. This government didn't get any, but they could get money of that nature for operations, paying police salaries, for a capital grant to buy various pieces of equipment, okay? But bottom line, $1,025,000 plus 35 minus the 78, this government basically lost money on the public safety. And if you look, every single program is a loser because we have what? We have taxes. Taxes come to save the day, right? And so what this statement allows you to see is how your tax dollars were used to cover all of these programs. And so at the end, we have a change in net position. Change in net position is like the net income at the government-wide level. And for our governmental funds, it was 794, and our plus our internal service fund was 794,500, plus the beginning net position, whatever that was. And we already saw the ending net position on our statement of net position. Okay. Now, when you circle that number 794,000, I want you to go ahead and put C page, and I want you to see page 13. Okay. And so what I want you to do is just go ahead and flip over for a second to page 13. And what this is Recon 2. So we reconciled the balance sheets. I don't know why I'm putting a Roman 2 there. Okay. Recon 2, and this is going to reconcile the income statements. Okay. Now, you see the change in net position down here, 794,500. Is that the number we were looking for that we got from page 10?
Yes.
Okay, good. So you could put C page 10. Okay, good. And then you have the change in fund balance. And for this one, you can put C page. And for that number, put C page 12, which, guys, it's just the page right next to page 13. See page 12. And when you come over to page 12, we now have our statement of revenues, expenditures, and changes in fund balance. And remember, we had revenues, we had expenditures, right? If we spend money on equipment, that's part of our expenditures, both the principal and the interest payments, right? Our expenditures. This is a modified accrual. This is for my, governmental funds, okay, governmental funds. It's modified accrual. We're following all the modified accrual rules here. Revenues, expenditures, okay, different things, capital outlay, right? Our expenditures, remember, excess of revenues over expenditures is sort of like the operating income number. Other financing sources and uses, there's only one other financing use, transfer out, two other financing sources, long-term debt proceeds and transfers in, and you end up with the net change in fund balance. Change in fund balance is like the net income. Now we're down at the governmental fund level. That says like net income, 171,500. That number, see page 13, that was the number that we saw at the top of reconciliation 2 on the previous page, right? So now when you take a look at this thing, you have what? Let's go back to Recon 2 now. You start with the change in fund balance. We see that comes from the statement of revenues, expenditures, and change in fund balance. It's the governmental funds income statement, and we're going to reconcile to the statement of activities change in net position, which is the government-wide net income. And we have to do this because we're using modified accrual for our governmental funds, full accrual at the government-wide level. And so let's just start to take a look at some of these items. Bond proceeds. Well, bond proceeds is like another financing source. So it would have increased my change in fund balance. But when you're dealing with what? Full accrual accounting, you issue long-term debt. The credit is not to an account that increases your fund balance. It's not an other revenue type account. We call it other financing sources. It is what? The credit goes to liability accounts. So we have to subtract that out, okay? Then if we pay what? We pay principal on long-term debt. Well, when you pay principal on long-term debt, that is not an expenditure like it is under modified accrual accounting for the governmental fund level, reduction of liability. So we go ahead and we add that back, okay? Then what? Then we have proceeds of land sold. We're going to go ahead and subtract off the proceeds of land sold because that's going to essentially be treated, the entire proceeds is treated like revenue at the governmental fund level because we weren't carrying that land as an asset to begin with. Meanwhile, what? We would go ahead and add back the gain on the sale because we would have taken that gain under modified accrual accounting. Under full accrual accounting, there would have been no gain under modified accrual. So you can see basically that we have to basically put back the difference between the proceeds and what was reported as a gain under full accrual accounting, that $75,000 difference. Okay, then what? Cost of the capital outlay, we add that back. That was expense. We don't have that as an expense under modified accrual, but under full accrual, but it would have been an expenditure under modified accrual. Now we have to take depreciation. So we go ahead and we subtract out all those depreciation numbers. And we subtract out all those depreciation numbers because we weren't taking depreciation at the fund level, governmental fund level, but we would have to take it at the government-wide level, okay? Then notice we're going to pick up the change in net position from our internal service fund. It's like the net income of the internal service fund. You pick that up because the internal service fund is not a governmental fund, it's a proprietary fund. But when we get to the government-wide level, we will go ahead and roll it into, that's that 26,000. Sorry guys, I highlighted the wrong thing. That 26,000, we would go ahead and have to include that with our governmental activities at the government-wide level. So we have to add the net income of the internal service fund because it's not treated as a governmental fund at the fund level. And then again, here's that 125,000 of revenue that we would have taken under full accrual accounting that we did not take under modified. Okay, now this is a very comprehensive reconciliation, okay? And I'm gonna show you a problem now going back that I think we better work together because I was gonna sort of turn you loose on it, but I think we better work it together. Going back to page 6 now, okay? But let me tell you, the chances that they're going to give you something this comprehensive in terms of how to deal with the reconciliation between the government-wide and the fund financial statements is highly, highly unlikely, okay, that they're going to give you one this comprehensive. But it's good because it does let us kind of practice with all the different things that could constitute the reconciliation. On a question on the exam, they might pick 1 or 2 of these and see if you know how to handle them as reconciling items. And it starts to become pretty much a common sense thing, or not common sense, but something that you get fairly comfortable with fairly quickly. Let's put it that way. Once you deal with a few problems from your homework and stuff, okay? From the different chapter 10 homework questions that deal with reconciliation and the few questions that are in this area with our final review, okay? So let's just look and notice they want us to figure out the change in net position. That's the call of the question. And they start out with the change in fund balance. So is this Recon 1 or Recon 2, do you think? We looked at 2 reconciliations. One reconciled the balance sheet, the other reconciled the income statement. So do you think we're reconciling the balance sheet or the income statement here?
It's Recon 2.
Good. It's recon 2 because what? Change in fund balance, right? That's like our net income number. Good. So we're going to reconcile the change in fund balance, which they tell us here is what? 2,002,000, just picking that number up. And the call of the question is what? They want us to basically tell them change in net position, right? That's what we're trying to figure out on this question.
Mhm.
Okay. Okay, good. So let's start to take a look, see what we're going to do with these different items here. And we had capital outlay of 10 million in the modified accrual statement. So they had bought equipment for 10 million. That's an expenditure at the fund level. What should we do to reconcile it to the government-wide change in that position?
Got it.
Good. I'm going to add that 10 million. That's no different than the adding of that $1,000, right? Same concept. Okay. Good. So I'm going to add that 10 million. Okay. Now, what happens? They tell me that the general government fixed assets were 160,000 and have a life of 20 years. So if I take 160,000,
It's 160 million.
I mean 160 million, and I divide it by what? By 20 years. That means that the depreciation should be what? About 800,000 per year? If I'm doing my math right. Okay. Did they take the depreciation at the fund level?
No.
No, we don't have any fixed assets. We don't have any depreciation, but government-wide, yes, full accrual. We do have to report depreciation. So it's not 800,000, it's what, 8 million? 2, 3, 4, 5, 6, right? 160 million divided by 20 years is 8 million, John. So I go ahead and I have to I have to subtract that depreciation now, don't I?
Yeah.
8 million depreciation. Okay, good. Got that one done. Okay, question? Okay, now I look at this next one and it says the modified accrual statement reported proceeds from the sale of land in the amount of 1 million, and the land had a basis of 800,000. So what am I going to have to do with that? Well, if it had a basis of what? Of 800,000 and I got proceeds of 1 million, I'm basically going to need to sit there and do what with that? I have this 800,000 is the basis of the land, and the land had what? Had an 800,000, and I did what? I sold it for 1 million, right? Okay. So what happens? I sold it for 1 million. It had a basis of 800,000. So that means I reported what? At the government-wide level, I reported a gain of 200,000.
Yeah.
But at the fund level, I showed that entire $1 million as what? As some kind of revenue, other revenue, whatever. So what happens? I have to sit there and I have to subtract out that 800,000 because I've shown what? A full $1 million as revenue, but under full accrual accounting, I only should have showed a gain of 200,000, right? So when you deal with something like that, you're basically going to have to subtract out whatever the basis is of the property that you sold, and that will be the correct reconciling item. Because the gain that's reported at the government-wide level is the difference between what you sold it for and the basis. But at the accrual, full modified accrual level, the fund level, you would have reported the full million as revenue. Question on that? Okay. Okay, good. Then they come over here and they tell us property taxes would have been levied in the amount of 20 million. It was estimated that 3% would be uncollected. There's no difference between modified accrual and full accrual in terms of how you deal with uncollectible revenues. Okay. That 1 million would be, it is estimated 3% would be uncollectible. That 1 million would be collected within 60 days of year end, and that 400,000 would be collected what? 400,000 would be collected more than 60 days from year end. If 400,000 is going to be collected more than 60 days from year end, would we include it as revenue at the governmental fund level? No, that's going to be a deferred inflow, right? Because it passed the 60 days. We don't worry about the 60 days at the government-wide level, so we would go ahead and do what? Add that 400,000. We would have treated as deferred inflow at the fund level. At the government-wide level, that 400,000 is good. We can count that as revenue. Okay. Okay, good. 370,000 of property tax has been deferred at the end of the previous year and was recognized under modified accrual accounting as revenue this year. So now we've got an amount that what? We had to take as revenue for modified accrual this year because it fell out of 60 days the previous year. But for full accrual, we took that as revenue what? We took that as revenue last year. So we have to subtract out that 370,000. Okay. And then number 5, the modified accrual statements reflected debt service expenditures in the amount of $1 million for interest and $1,500 for principal. Now, interest is an expense both under modified accrual and full accrual. So we don't have to sit there and worry about that being a reconciling item. But this $1,500,000 for principal, that's not an expense under full accrual accounting, right? Even though it's an expense under modified accrual. So I'm going to go ahead and add that. And then what? Okay, and you probably need to like go take a deep breath by the time you get done to the end of this question. Compensated absences charges on the full accrual basis amount to 100,000 more than under modified accrual. So I've got to go ahead and, that one's an easy one. Subtract that, right? They tell me it was more under on full accrual than under modified accrual. So I have to subtract that. And then you pull out your calculator and do this horrific, math problem that if you were, in the 3rd grade, you'd think was horrible, but with a calculator, it's not too bad. And you do all the math on that, and it's 4,632,000. So the correct answer is, and they put 1, 2, 3, 4. Remember, on the exam, it's not A, B, C, D anymore. You just fill in the bubble for the appropriate one. Okay, now this was a monstrous question, guys. Okay, and I don't think the exam is going to give you something that has all this. And sometimes Tom is having so much fun when he's putting one of these together that he has trouble stopping himself. And I've told him that before. I've told him, I don't know how your wife stays with you because you must be spending hours doing these things, but they've been together a long time. And so it works out for him, I guess. I would say on the exam, you might get a question that might ask you 1 or 2 reconciling items. They just want to see, have you bothered to look at governmental accounting, and have you bothered to understand some of the low-hanging fruit, some of the more basic things about governmental. And again, I keep harping back to that stupid Facebook page for the FAR exam, and I keep hearing people whining about governmental and why didn't Becker make it clear that governmental was going to be an important part of the exam. Meanwhile, there's a whole chapter, and there's 2 chapters. Show me another subject in the entire set of material for the FAR exam where there's 2 chapters worth. The good news is, so you're going to get about 10 to 15 points of governmental. Not so much this stuff that we're going over now, more the stuff that we saw in chapter 9 and the first part of chapter 10 as we wrapped up the funds. But you will see a few questions dealing with government wide. And if you get something on the reconciliation, it's going to be a couple of reconciling items, not a whole ton of every possible reconciling item. Okay. Question? Okay, good. One more thing I want to, a couple more things I want to look at for governmental. One of them now is something that I went past before. Which is on page 5. There it is. Okay. Which is statement of cash flows. Okay. Now look, statement of cash flows area is something that you are absolutely going to be asked on the exam. You can count on. They're going to ask you statement of cash flow questions, and they're going to ask you about for-profit statement of cash flows. They're going to ask you about not-for-profit statement of cash flows that we talked about a little bit in chapter 8. They're going to ask you about government statement of cash flows. Okay. Now, I have not heard much in my dreams about government simulations, and I haven't seen anything called out in the Facebook stuff that I should ignore about the state simulation for government. But some years back, I did have some students that said to me in my dream, they said to me, hey, I got a simulation on the statement of cash flows for an enterprise fund. Okay. Now, only the proprietary funds prepare a statement of cash flows. Okay. And for the particular situation that I dreamt I heard about, it was for an enterprise fund. And in the dream, the student was crying, saying, I had no idea how to handle it. They weren't really crying, but they were like, I didn't know what to do. What you do if you were to get something like that is you pretend that you are preparing a commercial statement of cash flows. And we're going to go back and review statement of cash flows here in a couple shakes of a dog's tail here. Okay, but you pretend that you're preparing a commercial statement of cash flows, but you're going to know where the government version is different. And when you come to something that's different for government, do the government thing. Do whatever it is you're supposed to do for government, and then just continue on what you will fully understand very well if you were preparing a commercial statement of cash flows. Okay, that's the way we're going to attack these. Okay, so the first thing is the direct method is required. So look, easy points for knowing right out that if you're asked to do a government statement of cash flows, you have to use what? The direct method. Okay. Now, some other easy things, the easy points. There are 4 categories instead of 3. You still have what? Operating and investing, but now they've taken the financing and broke it into whether it is financing related to non-capital or capital related. So if you borrowed money, let's say to acquire equipment, then that would be a capital related. If you borrowed money to pay some salaries or something, then that would be considered non-capital financing. Okay. Interest income is reported in investing activities. Interest expense is financing. And again, it depends on why you borrowed that money. If you borrowed that money to finance the purchase of a capital item and you're paying interest now, that interest is considered, capital related financing. If not, then it's non-capital related financing. Okay. Assets purchased are financing. In commercial, they are what? Investing. Okay. Interest expense, okay, which we've pretty much already said, is what reported as financing, and it's either going to be reported as what? Non-capital or capital related financing. Again, it is not operating activities. I'm not sure why they needed that twice. They said, I mean, am I missing something, or is that a repeat of what they had said earlier up there? Okay. And then there are some transactions that are unique to government, and it's worthwhile to know where those should be reported. So you might want to look back where they give you a more detailed list in the main textbook. And then the reconciliation, because remember, even under the direct method, you still have to reconcile, and in the commercial version, it's net income to cash provided by operations, just like you do in the indirect method for the operating section. In government, you have to use direct. And when you provide the reconciliation, it is operating income to cash provided by operations. Okay. So basically, if you see yourself in the face of a statement of cash flows and it's asking you to do government and you're asked to do some sort of simulation, no panicking allowed. Points for knowing what? Direct. Points for knowing that there's 4 sections. Points for knowing something as simple as what? If you purchase equipment, it's financing, not investing. Okay, so you kind of go through that and you will score more points than anybody else looking at that question is going to sit there and say, oh, I thought there were no government simulations. These examiners have not said that. It's rare that you see them, but there's always a possibility that they might give that to you. Okay. Question? Okay, good. Now I want to come over, and you see this form and content of comprehensive annual financial report. I want you to just put see slides. Okay. And I'm going to get out of the final review textbook for a second. And these slides that I'm going to go through now with you are basically, what I do with my clicker, put it somewhere, I don't need it, that's okay, it's not that many slides. And just show you, this stuff is basically from the main textbook, but I've just gone ahead and pasted them into slides, okay? And what this information is telling me, remember, we had that basic GASB reporting model, the MD&A, which is required supplemental information, is the first thing you see. Then you see the basic financial statements, which is the government-wide, the fund financial statements, and the notes there too. Little arrow pointing back and forth, that's representing our reconciliations. Then we have what? Then we have the required supplemental information other than MD&A down there at the bottom. Okay, that thing I put up at the very beginning of class here today. Now, what happens? What they tell us is, well, if I'm a government, how do I know if I'm supposed to prepare that? Okay, so what this information is telling us is when a government entity will be required to prepare that set of information. Okay, so notice it says that generally the financial reporting entity consists of the primary government and organizations to which the primary government is financially accountable, and we call those component units. Okay, now what happens? You take a look, and how do I know if I'm a primary government? I'm a primary government, you can see in the green here, automatically, oh, let me stop and let me show you my highly technical little picture here. Okay, what happens? The primary government is the parent in this relationship, and the component unit, I'm trying to put CU there, the component unit, the CU is the child, right? Okay. Now, what they tell us, they say organizations for which the primary government is financially accountable. Are parents financially accountable to their children? Try and have one someday and tell the government you're not financially accountable for you, and they'll tell you something different. Okay. So parents are what? Financially accountable for their children. Primary governments are what? Entities that are financially accountable for their component units. Okay. Now, what happens? In this discussion, you are either a primary government or a component unit. You're one or the other. And if you are a primary government, you have to provide all that information. If you're a component unit, you will be reported on the financial statements of your parent, of your primary government. Okay. So first, how do we determine if we're either a primary government or component unit? And you look and they say, okay, if you're a state government, you're one of the 50 states, don't ask yourself another question. You're automatically a primary government. That's it. Okay. If you are a general purpose government, like a city or a county, you are automatically a primary government. So the city of San Francisco is a primary government. The county of San Francisco is a primary government. The city of Hayward, believe it or not, is a primary government because it's a general purpose government, right? Okay. Now, if you are a special purpose government means you have pretty much just one purpose. Unlike with cities have many purposes, public safety, parks and recreation, whereas a special purpose government pretty much just has one purpose. For example, a school district special purpose is what? Education of the children, whatever, right? Okay, so for a special purpose government like a school district, they have to go through a set of criteria to see if they indeed are a primary government, and they have to meet the self criteria. This is 3 criteria, meaning that they have to have a separate elected governing board, they have to be legally separate from the primary government, and they have to be fiscally independent. And if they meet all 3 of those criteria, then the special purpose government is a primary government. If they fail any one of those criteria, what are they? You can only have one other choice. You're a component unit, and you will be included on the financial statements of your primary government. Okay, now, before we go any further, let's go back to the textbook for a second, to our final review textbook for a second. And I want to go back to those financial statement examples. And notice we have what? Primary government of this township. I assume it's a primary government because it's a city. And so it met, it didn't have to do anything further, right? But then it has what? It has component units. Those are its children. And it could be several children that'll be rolled up all in one big number there, one big column. In the management discussion and analysis, they'll probably call out what the nature of the component units are. But right here on the financial statement, we roll up our component units. And this is something called discrete presentation. Let's see if I can respell that. Discrete.
On the actual on the statement, they don't actually have to list all of them. They can just put component units and that's it.
They put component units and then they add together the information for however many component units they might have, 4 or 5. It's kind of hard to come up with an example of component unit because they're kind of these weird entities that it's a little bit difficult for me to say, here's what they would be. But generally in the MD&A, they'll call them out by name. And then on the face of the statements, both the government-wide statement of net position and the government-wide statement of activities, they'll call out a column. They'll pull out a column called discrete presentation, and they'll list their information there. But they don't call them out one at a time. And these are special purpose governments that did not meet the self criteria, right, are being presented in this way. using discrete presentation. Okay. Okay, so just going back to my slides. Okay, so those entities that were not meeting the criteria to be a primary government are automatically considered component units, and we saw how they look on that column, right? Okay, now you come over and you take a look, you take a look at this next slide. Okay, and in the next slide now they talk about how to display component units, and what they say that component units should generally use what? Discrete presentation. And when it's discrete presentation, we saw that column, right? Okay. Now there is another method which is used much less commonly than that column for component units, and we call that blended. And we use blended presentation if any one of these three things comes up. And with blended, you say, well, show me blended, John. I can't, because it kind of be like saying, here's a milkshake, here's the milk, here's the ice cream. I can't show you because it's all mixed together. And there I go mentioning milkshakes and ice cream. Now everybody's like, let's have an ice cream break, right? Okay, so what happens? This, you use blended when the board of the component unit is substantially the same as that of the primary government, or the component unit serves the primary government exclusively. That's not a school district. School districts serve who? Serve children, not the primary government. Or the component unit is not a separate legal entity. Any of those situations, then use blended. But most of the time we're going to use what? Discrete, that columnar format. Okay. All right, good. So with all that, let's just look at an example of a question. I think I had a question here. Yeah, let's look at this one. Okay, and you might see this in your homework for F10 too. South City School District has a separately elected governing body that administers the public school system. Okay, separate elected body, so it's not likely that the boards are substantially the same. The discrete budget is subject to the approval of the city council. Stop. If the budget has to be approved by the city council, is this school district fiscally independent? No. So we know it's not a primary government. We know it's going to be what? A component unit. And we know that if it's displayed as a component, because it has to be one or the other, if it's displayed as a component unit, we either use blended or what? Discrete. And so far, I haven't seen any of those criteria for blended. Okay. The district's financial activities should be reported in the city's financial statements by discrete, which is generally the case, unless I see something weird that's indicating to me that they should use the blended criteria. Okay. Okay, good. All right, guys, that is not it. Couple more things for the governmental, and then we'll move on to some other stuff, because I know you don't want to sit here and talk about governmental all night. Okay. All right. So let's just take a look at something called comprehensive annual financial report. Okay. Now, when you, am I missing something? Slideshow from current slide and.
Resume. What says resume slideshow?
Huh?
Where it says resume slideshow, that little box, you were just where it says like draw design at the top, and then there's a little box, click resume slideshow right below that, right below it. Yeah.
Okay, well, why do I have to do that when I'm telling you I wanted to start it from the current? But okay, sometimes I get real frustrated with PowerPoint, but anyway, okay, thank you. So what happens? Comprehensive annual financial report. Okay, so what happens? The key two words in here is the annual report. Okay, so state and local governments have to provide an annual report if they follow the requirements of the GFOA, Government Finance Officers Association. And what they do is they give an award for excellence in financial reporting to state and local governments. And almost every state and local government prepares a CAFR because it's probably written into legislation somewhere that they'll provide this CAFR, and they will follow the GFOA requirements. Okay, so what the GFOA says is there's 3 sections: an introductory section, a financial section, and a statistical section. Okay, and if you want to prepare a CAFR, you don't have to, by the way. CAFR is optional. You got to prepare the MD&A, the basic financial statements, the required supplemental information other than MD&A if you're a primary government. You don't have to prepare a CAFR under any sort of accounting standard, but again, often state and local legislation will say you have to prepare this CAFR, this annual report, okay? And so what happens? You take a look and you have these 3 sections, and the introductory section, if you choose to provide a CAFR, and most governments do, has to have a title page, a table of contents, a letter of transmittal, and then other information is desired by management. It usually includes like a bunch of pictures of politicians and stuff, the mayor, the legislature, that kind of stuff. Okay, they can provide other information, organizational chart, that sort of thing. Okay. Now, when you go to the financial section, and all of this stuff should be pretty familiar to you, you have the auditor's report, and then you have what? The MD&A, the basic financial statements, okay, and the required financial statements other than MD&A. So what they do is they say, well, if you prepare this CAFR, you have that introductory section. In the financial section, pick up the GASB reporting model and stick it into the middle of this thing. So they just tell you to go ahead and lift up information that's required and stick it in to the middle of this thing. You could also have combining statements. Those aren't required under GASB requirements, but many companies choose to prepare those, and you can pick that up and include that part of the as part of the financial section of the CAFR. Okay, and so all I'm doing is showing you that graphic that I sort of scribbled in there a minute ago or a while ago when we started this discussion. In that financial section, MD&A, which is required supplemental information, basic financial statements, which includes the government-wide, the fund financial statements, the reconciliation, the notes there too, and then the required supplemental information other than the MD&A. That goes into the middle of the CAFR, the financial section. MD&A is a narrative, and this guy has this thing turned the wrong way, because if he wants to hear it better, it seems like she should speak into the little end and he should listen through the big end, but whatever. It's a narrative. It's words that are being written, okay? And you read about financial aspects of this government. It's not, oh, look at our beautiful city. It's, hey, you see the financial statements. Let us amplify on a few things there related to the financial statements, okay? Then what? Then you come over, and that last section is the statistical section, and it goes on and on and on, guys. They'll talk about the last 10 years of, you know, tax dollars per capita. I mean, they have all kinds of things in there. In that statistical section that goes on for years and years. Okay. Okay. So the 2 key takeaways of the CAFR is that it is what? It is not required. If you do prepare it, got to have an introductory section, got to have a financial section, which is basically our basic GASB reporting model. And then you have a statistical section, which covers what? Covers many, many periods. Okay. So it gives you a bunch of everything you ever wanted to know about the government. Sometimes I'm amazed. They talk about tax revenues that are provided in the haberdashery department, haberdashery business. I mean, they ask all kinds of things, okay? All right, good. Or they present all kinds of things. Which of the following statements about the statistical section of the CAFR, the Comprehensive Annual Financial Report, which, by the way, they don't use that term anymore. They've gotten rid of that abbreviation now, is true, okay? So what happens? Statistical tables may not cover more than 2 fiscal years. That's not true. I just told you they could cover several years, right? So that's not right. Statistical tables may not include non-accounting information. That's not true. They can give you all kinds of information about population, statistics, trends, etc. The statistical section is not part of the basic financial statements. That's right. The basic financial statements is what? Is part of the middle part, which is part of the CAFR, right? Of the Comprehensive Annual Financial Report. So the answer here is C, D. Statistical section is not, it is an integral part of the basic financial statements. No, it's not. The notes are, but it's not the notes. It's its own section in the Comprehensive Annual Financial Report. Okay, question? All right, good guys. So that kind of catches us up, even though we're doing it in final review mode, of some things that we didn't get a chance to look at in chapter 10. So I think that's a good point for a break. My plan, unless you guys tell me otherwise, is to go to 9 o'clock. But if you want to just cut out at 8, I'm not going to cry. So it's up to you guys if you want to go another hour. But what I want to do right now is take a 10-minute break, and we'll come back at about 10 to 7. Okay, let's do that. And we'll start to go through some of the other parts of the final review for some material that we actually have already discussed in the regular book, okay? Okay, so we're looking back at F8 quickly for the direct method, and I forgot to hit record earlier, so some of that stuff you might have missed, but right here, okay, on page actually starting on page 17 where they talk about the direct method. Okay, I talked to you at that time when we went through F8 about a series of flashcards and how to present those flashcards for the direct method, okay, as you calculate different things such as cash received from customers and what are cash paid to suppliers, okay? The only thing that gets a little confusing here is remember that when we're talking about expenses, we kind of flip the rules the other way than what we've talked about previously under the indirect method for current assets and current liabilities. Bottom line, make sure you made these flashcards the way I talked to you about. On the off chance that you get a direct method, I don't want you sitting there unable to even get out of the gate on this stuff because you forgot some of these key parts of the statement of cash flows and how to calculate them. Okay, and I gave you some flashcards on these back in F8. Question? Okay, so make sure you've got, and I don't like the way they're doing them, okay, the way they're kind of like increase, figure out the change, and then figure out whether you're supposed to do the same or the opposite, right? Okay, sort of the way we did with the indirect method. Okay, good. So if we have that quick reminder, and that went smoother than I thought it was going to. Okay, let me get out of full screen and let me go back, please. I spoke too soon. No, there it is. Let me go back to my final review tab. Okay, and let me come back to full screen. Okay, so again, you can see the various categories here for my direct method, but please, God, make sure you've looked at those flashcards, how to calculate things using these different elements of the direct method using those flashcards I talked about. Okay, okay, good. So let's come over and let's take a look and see if we can do a question, cash paid to suppliers. Okay, so you might get one, maybe two questions, even if they don't give you a full-blown problem using the direct method, they may give you a question that's something like this about the direct method because FASB prefers the direct method. And, you know, the examiners, I guess, don't feel comfortable completely disrespecting, ignoring the method that FASB prefers. So you'll probably get 1 or 2 questions. Okay, so they tell me something about inventory, they tell me something about accounts payable, and they want me to come up with the cash paid to suppliers. Now, what that flashcard would tell you is do what? Start with cost of goods sold. I think you know that. That's pretty easy. And then you're going to look at these items, and the rule is for assets like inventory, do the same for whatever the change is. And that's why I don't like the way the book presents it. Add the, I think they say add one balance, the beginning balance, subtract the ending balance or something stupid like that. Just look at the change. What is the change? Because if they give you a problem like this, how are you going to apply that flashcard if they don't tell you what the beginning and ending balance was, right? So that's why I focus on the change, okay? And what I tell you there is figure out the change in the inventory. And for the inventory, do the same. For the liability for accounts payable, do the opposite. Okay. And as I said, it gets a little distracting because we do it the reverse way in the indirect method. The reason we're now flipping that is we're dealing with an expense that we're trying to turn into cash provided by operations. That's the mirror image of trying to turn net income, which is a credit, into cash provided by operations. So that's why you do the opposite of what I told you to do under the indirect method. If it's revenue, you do the same thing with these that I told you to do under the indirect method, because revenue is a credit, okay? So what I do here now is I do the same. So since my inventory, decrease 160, I have to subtract that, okay, to get cash paid to suppliers. And since my accounts payable did decreased, I have to do what? I have to add that, okay? And when I do, I get 330,000, right? Okay. Okay, so again, you can see that these questions are kind of tricky. That's why it's important that you make those flashcards, guys, and got it clear in your head, and you're pounding those flashcards into your head over and over again. You know, somebody, I got to stop referring to that Facebook page. I can't get it out of my head though. You know, I saw somebody say, what should I memorize for the exam? And then somebody else said, don't memorize, understand the concepts. You know, I'm like, okay, amateurs, okay. Look, there are things that you have to know solid, okay, that you gotta be comfortable with. And so the CPA exam becomes one of these things that is, you know, really to a large extent, you know, almost like a physical fitness thing. Okay, it's weightlifting, it's jogging, it's being ready for the fight on the day of the fight with all of the things that you need to be able to be successful. It's not what do I memorize or just understand. It's some memorization, it's some jump rope memorization, it's some weightlifting, practicing with these problems so that you are able to perform that you need to at that 75 or higher on the day of the exam. Okay. Okay, question on that? Okay, good. Let's go ahead, and they show us a full-blown statement of cash flows here. God, they're annoying. Oh, this is the direct method? Okay, that's okay. That's the direct method. Okay, now investing activities. Okay, just think of what? Think of an investment department. Just think of your investment department, purchase or sale of property, plant, investments in marketable securities. Don't forget, guys, if it is a trading security and is a current asset, that goes in operating, okay? If it is a trading security and it is a current asset. Okay, all right, so how do we want to do this next one? You want me to let you do it, or you want to do it together? You want me to do it, or you want to do it?
Let's do together.
Okay, and AKA you want me to do it. Got it. Okay. And you'll help me along if I get stuck, right? Okay, good. All right, so let's go ahead and let's take a look at what they want us to do here. And on January 1st, year 11, okay, Cool Tools purchased fixed assets of 50,000 and sold fixed assets with original cost of 18,000 and a book value of 6,000 for 10,000. Cool Tools made no other long-term asset purchases during year 11. What is Cool Tools net cash used in investing activity? What is Cool Tools net cash used in investing activities and the amount of depreciation adjustment to the operating section of Cool Tools statement of cash flows prepared using the indirect method. Okay. Now, what I'm going to do is first do my investing activity section. Okay. I think that might be the easier one, right? Net cash used in investing. So what happens? Well, I purchase a fixed asset for 50,000. Is that a use of cash? If you purchase a fixed asset for 50,000, is that a use of cash? Huh? Right?
Yes.
Okay, good. So I know that I've got that 50,000 subtract. And then they tell me that they did what? They sold a fixed asset at a cost of 18,000, a book value of 6 for 10,000. So that means they had 10,000 coming in, didn't they? And that would be shown in the investing section. So the net use of cash is 40,000. And if I got stuck on this question, I could turn it into a 50-50 chance of getting it right, correct? But now I have to go ahead and I have to do what? Analyze the accumulated depreciation to get the depreciation expense, right? Which would be the thing that I would do in the operating section. And this now goes back to that earlier example, beginning, the add is what I'm looking for, the subtract, and then the ending. And so I just start filling in the gaps. What is the beginning? Since I'm dealing with year 11, the beginning for year 11 is year 10's ending of 41,000, right? Right? Year 11's beginning is year 10's ending. I'm analyzing year 11 here, right? Am I doing something wrong?
No.
Okay. Okay, good. Guys, I don't want to talk to myself. Okay. Ending balance is what? 53. Go ahead and put the 41. Ending balance is 53. And then I have to figure out, well, what was the subtract? Well, if they tell me that there was an original cost of what? 18. And they tell me that there was a book value of 6. That means that this equipment had what? Had a $12,000 accumulated depreciation, right? Which was the subtract. So I would go ahead and put that in as the subtract. That means that before I subtracted, and this is kind of subtracted 12,000 to get to 53, I do my little subtotal thing. And 53 plus 12 means they must have had what, 65 in here? Well, how do you get from 41 to 65? You would have had to have added 24, which is the depreciation expense. Okay, so the answer here has to be what, number 4?
Kind of simpler than how they explained it. I watched the video for this question.
Uh-huh.
And they set up like a T account but not for accumulated depreciation. It was for like net book value fixed assets, and they had like beginning balance on the debit side for 87,000 for year 10, and then the ending was 107, and they credited the 6,000, which was the book value, and they debited 50,000, which was the purchase, and then like went back and saw that 24 was the current net depreciation. So they did it.
Yeah, I've seen stuff like this taught with journal entries before, because Becker has what they call live online classes. And a couple times I volunteered to do the live online backup. And with the live online backup, you sit there just in case the other person's system crashes. You can come in and you can teach it. So you sit there and you watch the other person teaching the class. And for that, they give you a whopping $250. And you have to get up at you have to be completely ready to teach the class. And then you have to get up at like 6 in the morning because they put the classes so that they're starting at like 7 East Western and 10 o'clock Eastern to cover the whole country at once. And finally, I told them, guys, I don't want to do this anymore because I get up at 6 in the morning to sit there on the off chance that I get, asked to start jumping in because the person has a technical problem. And then even if you take over the class, then when the person logs back in, you shut up halfway through whatever you were saying and let them take back over. Anyway, more information you needed. I saw them use a journal entry, some people to teach this kind of stuff when I was watching. And the problem in T accounts, and the problem with using T accounts, God made T accounts, okay, to help you to know what the balance is in an account at any point in time, okay? So there are times where if the question says, what's the ending balance in an account, then the T account is fine because that's what T accounts do, okay? T accounts do what? They have the beginning balance, right? And then you make debits to the account, whatever. You make credits to the account, and then there's an ending balance, right? So if they ask you an ending balance, T account, I'm all in, but that's not what these kinds of questions are doing. They're making you go back up. T accounts aren't made for that. This is made for that, the account analysis format. And a lot of times when people start using the T accounts, they were not trained by Newt Becker himself. Okay, I was trained by Newt Becker. By that meaning I was his student, and then I used to listen to his tapes when I first started teaching Becker, and he was the genius at coming up with this kind of stuff that would allow you to quickly work through questions in a CPA exam environment, because we have what, minute and a half per question? We don't have time to be sitting there messing around with T accounts in most cases. So again, that idea of, well, don't memorize. Yeah, you can't memorize, you have to know what you're doing, but you have to be systematic in how you go through these type of questions. And that's what I'm trying to push here. Okay, good. Come over and let's look at the financing activity. And this one really is just a matter of, can you figure out what goes into the financing? And so again, we think what? We think financing department, okay? So would your financing department pay amounts to retire your debt? What does a financing department do? Financing department gets money in, but of course, it's got to be paid back. I mean, you don't get to borrow money indefinitely, right? So would a financing department pay money? Yeah. Okay. So I know I got to back out that 750,000. Good. Okay. And I don't even think you could get to the answers without it. So that's another thing that's helpful too. Okay. Then what? Distribution year one of cash dividend. Did your investing department pay dividends? I mean, your financing department pay dividends? Yeah, that's sort of what they do. They issued some stock. Now they got to pay the dividends on it. Good. Let's see. Carrying value of convertible preferred stock of Brianna converted into common shares. That's a non-cash financing type transaction that would be disclosed, but it is not part of the calculation of the financing department. There's no cash involved there. Okay. How about proceeds from the sale of treasury stock? Yeah, I go ahead and I sell my own treasury stock. That's again a financing type activity. And so you would go ahead and what are my notes do? Yeah, that's a plus, right? And so you go ahead and you do the math on that. What do I get? 717. Okay. Okay, now I want to make a quick little speech here. I'm not going to go through all this stuff. Some of this stuff is not our time here. Oh, they used to have right here an example of a task-based simulation for statement of cash flow, but I guess they got rid of it. The only thing I wanted to say here about, task-based simulation and statement of cash flows, they give you a balance sheet, they give you an income statement, right? And then they're going to give you all of these different things that you have to handle. You're going to have to figure out the change in your clad items for your operating section. Let's say you're using indirect. They'll tell you what the net income is for the period, that kind of stuff. Okay. I can't believe they cut that out of here. I don't know why it's not here. Okay. Anyway, in the statement of cash flows, they'll tell you all these different things, and you're going to have to go through and work through all of those things. They'll tell you that they purchased equipment, that they sold some equipment. You're going to have to figure out all of those different things for your investing, your financing section. And when you do all that, what's going to happen is you're going to calculate the change in cash for the period. And then you'll look at the balance sheet, you'll see the beginning cash, you'll see the ending cash. The difference is the change in cash for the period, isn't it? Okay. So your temptation is then going to be, well, wait a minute. If I take the beginning cash and add it to the change that I calculated, it doesn't add up to the ending cash. Let me go back and try to figure out, because I know I did something wrong now. And do not do that on the CPA exam. CPA exam is all about what? Accumulation of points and moving forward to that next section of the exam where there's more points yet to be earned. So what you would do is you would simply put in the beginning balance of cash that's provided in the balance sheet, put into your statement of cash flows the ending balance of cash which they provided. So on its face, your statement of cash flows will not balance. Leave it like that and move on. If you turned in work like that at work, they'd say, what's wrong? Okay, this doesn't balance. What are you doing? Is there something wrong at home that you want to talk about? You turn that in like that because you get points for what you put down correctly. Okay, so not only is it this jogging and this weightlifting exercise that I was talking about, it's also what? A little bit of this, a little bit of, hey, test taking technique. I'm going to go ahead and I'm going to put in these numbers because I know that I'll get points from these numbers, even though there's a technical problem with the way I've set this thing up. Okay. Question? Okay, good. Don't forget that, guys. You're just trying to accumulate points. You are not trying to show the examiners that you're a genius. Okay. Okay, good. Let's go over, there's no questions, to the next section, which is going to deal with investments. So I got to get us down to now topic 2, section E, dealing with investments. So let me see if I can figure that out quickly here. I guess someday what I should do is somehow mark the parts I want to go to by the page number in here. Okay, note to self. That'll make that a lot easier in the future. Okay, so I know I got to come back up. Anybody? That's okay. I think we're almost there. Okay, yeah, this is it. Okay, so let's go ahead and let's take a look at E1. Okay, and this is now topic, what, 2? Topic 2, E1. Okay, and let's jump through this one. Spend a little time with this one. So now we take a look and we have our 3 categories of debt securities, which I think you know well. Okay, trading securities, available for sale, and held to maturity, right? If it is a trading security, unrealized holding gains and losses go where? Go to the income statement. Available for sale, it's part of what? Part of other comprehensive income. And if we're talking about held to maturity, not reported, right? We don't do anything with those. Okay. Okay, good. So let's just come over and let's just look a little bit at what they tell us about impairment of debt. Okay, and this is one of those areas that we talked about briefly, but I just want to review it again because I know that it gets a little bit tricky for us. So under the current expected credit loss model, available for debt securities and held to maturity securities should be reported at the net amount expected to be collected using an allowance for expected credit losses. Now, how we treat those, okay, is going to depend. Sorry, guys, my eye is bugging me here. Give me 1 second. I'm sorry. Okay, sorry about that. It gets it's looking like it's getting darker and darker in here. It's okay. You don't need to see me that well. Okay, so it's kind of a weird look, but that's all right. Okay, now what happens? How we deal with those credit losses, we don't deal with them for trading, for the held to maturity and the available for sale, depends on whether it is held to maturity or available for sale. Okay, so if we have a debt investment which is being carried as held to maturity, then it's reported at amortized cost, and the investment should be reported at the present value of the principal and interest that is expected to be collected. The credit loss is the difference between the amortized cost and that present value. Okay. And what I want you to do is just give yourself a little note there to see question 4. Okay. But the credit loss is the difference between amortized cost and present value. I probably had you flashcard that in the main course, but if you didn't flashcard that, flashcard it now, because that's just something, one of those things you just have to remember. That's the one of those memorization things, and you just have to handle that way accordingly. And as long as you remember that, the question is easy. Okay. If it is an available for sale security, okay, the credit losses reported in net income on available for sale is limited to the amount by which the fair value is below amortized cost. Any additional loss is reported as an unrealized loss in other comprehensive income. Okay. And so for that one, you can see question 5. Okay. So what I want to do, we'll come back to a couple of these other things here in a minute, but since we've set those up as being relevant to those questions, let's just go scroll down. We'll come back to this other stuff. Let's just go ahead and scroll down and look at question 4 and question 5. Okay, so we have what? We have this Tyler Company. Let's look at question 4. Tyler Company paid $150,000 on January 1st, year 1, to purchase $150,000 to purchase $150,000 5-year bond at par value. Tyler classified the investment as held to maturity on December 31st, year one. Okay, so important piece of information. It's held. It's a held to maturity security, so I want to pick that up. Okay. On December 31st, year one, Tyler determined that the present value of the interest principal to be paid by the issuer over the life is $142,000. Fair value of the bond is $144,000. What should we report at credit loss? Well, we know it's what? Amortized cost minus the discounted present value, right? Okay. And so what happens? Well, they paid 150 to purchase 150 at par. So the amortized cost, there is no discount or premium on this, is 150,000 because they purchased it at par. And we know that what the flashcard that we had made is the credit loss is going to be the difference between the present value. And so we're going to include what on the income statement, credit loss of 8,000. Okay. They don't want the company to get into the business of sitting there deciding their accounting based on what the accounting, deciding what they're going to do based on the accounting rules. So they just tell, hey, you got to do it this way, so that they don't get into this thing where they turn around and they say, well, wait a minute, we're just going to go ahead and sell the security now for $144,000 because we only have to take a $6,000 loss. That's not how it works. Okay. Okay, good. Now you look at this next one, and this next one, Diamond Inc. purchased the following available for sale debt security. Okay, so this is now the available for sale rules. Okay, and on December 31st, year one, Diamond determined that the present value of the principal and interest expected to receive on the investment of XYZ Corp is $33,000. What they report as unrealized gain or loss. This bothers me a lot. They say on the statement of comprehensive income, and comprehensive income is what? Is net income plus other comprehensive income. So what they really meant to say here in this question is what? Statement of they meant to say statement of comprehensive income, but it gets a little annoying. Sometimes they say they mean the other comprehensive income on here, okay? Because that's what we have to figure out is what goes into other comprehensive income. So what we need to do is we need to look at this available for sale security XYZ, okay? And XYZ has what? The 35,000, which is what they had originally purchased it for. And they have what? This 33,000. So they've got this $2,000 credit loss here. Okay, that they're seeing for that. Now, what happens? That's on the income statement, right? Now, for OCI purposes, we're supposed to take what? The 33,000. And compare it to what? Compare it to the fair value of 30,000. So for OCI purposes, we have what? We have this $3,000 loss. Okay. And then when you look at ABC, ABC has what? Has the fair value, and they're now having a gain. They have, for this available for sale, they have fair value of 55 and what? Purchase price of 50. Well, that's a $5,000 gain, OCI gain. So when you look at the difference between these two, that's what? $2,000 gain. So choice one is the answer when you net these out for the available for sale security. But what I find annoying here is they should have told you the statement, what they want is the statement of what? Other comprehensive income. Because if you took comprehensive income, then it would be the income statement amount and the OCI amounts combined. Okay. All right, good. Let's go back to some of these other things that we went by. Okay. And let's just take a look actually at some of the problems now. Okay, I just want to go through some of these with you because when you look at the problems, I think it helps you to remember a lot of the things that we have talked about previously. Notice something though, when you look at this set of journal entries and information up here, it's always the difference between the cost and what you sell it for will always be what? Realized gain. That is a short way of weeding through some of these questions where they give you just way too much information and you're sitting there trying to figure out, they give you too much information, trying to sift through a bunch of it. If they ask you the realized gain, that's the difference between the cost and whatever you sold it for always. And that realized gain gets reported on the income statement. I don't care what category of security it is. Okay. Okay, good. Now, let's just take a look and let's look at this question. Okay. And the following data pertain to tying company, investment in marketable securities, blah, blah. There are no expected credit losses. What amount should time report as unrealized gain loss in the income statement? So the first trick is to know that you simply have to do what? You simply have to focus on the trading security. That's what gets reported in the income statement, right? Okay. And then you're going to take a look and you say, well, the original cost of this thing was 50. Okay. And at the end of year one, it went down to 100,000. So I would have debited loss for 50,000 and I would have credited the security for 50,000. Now, Armor, this is where I do like a T account, okay? Because if I take the investment account and I had originally bought that trading security for 150, and then I just credited it for 50,000, okay? Now I know the balance there is what? Is 100,000, which I guess they did give it to me here. Okay, but I just kind of like to keep track of what I'm doing, right? But it's 100,000, okay? And then they tell me that at the end of year two, where they're asking me here, at the end of year two, this thing did what? This thing came back to 155. So how do I bring it back to 155? I have to what? Debit the security for 55,000, and I'll have to credit gain, right? Which will be reported on the income statement, the answer to this question. Okay, so the answer here is A. Okay. Okay, good. All right, so some of these I find doing journal entries and T accounts useful. If they ask you, well, what was the beginning balance or something, I would stay away from T accounts. Okay. Okay, good. Let's go ahead and let's take a look at number 2 here. And they tell me what is the unrealized gain on available for sale securities on the statement of comprehensive income. And again, I think they meet the they mean the statement of other comprehensive income here. So they should have been more careful in what they did with these questions. Okay. With this one though, what I want to do is I want to do question 3 first, because they both have this the same information on them, and it's 2 different questions. And I think it's easier to understand question 2 if we've looked at question 3 first. Okay, so let's just go through and look at question 3 first. Same facts, but question 3, I think if you understand that, question 2 becomes easier to understand. So we say here that we have all this different information, and they want to know what should be the balance in accumulated other comprehensive income at 12/31 year 2. Now, when they ask me something like that, yeah, I'm setting up a T account for accumulated other comprehensive income, because I know that they're asking me the balance at the end of year 2. So I go through and I look at these different securities. Okay, they're all available for sale. And what's going to be irritating about this one is they're going to make me keep track of these, all these different securities, right? So I'm going to set up other comprehensive income over here. And my other comprehensive income, I look at the securities, and I have what? I have this one that is going up 5,000. That's an up arrow. And I've got this one that is doing what? Going down what? 6,000. Okay. Now, when you look at this security, since they're asking me at the end of year 2, by the end of year 2, what? They don't even give me the market value. So you have to make the presumption here that what? They had finally sold this thing by the end of year 2. So there is no more impact in accumulated other comprehensive income to answer this question. So I'm going to ignore that security. There's no amount sitting in accumulated other comprehensive income, because they would have already been taken out when I sold the security, right? You don't maintain amounts in accumulated other comprehensive income for something you got rid of. So for this, I'm going to ignore this Alpha Corporation, and I know that I have to do what? I have to go ahead and debit the 2 securities. I'm going to credit my what? My OCI for year 1 for 1,000, right? Because I have what? I'm going to, debit it for.
Isn't it the opposite? 35 to 30 would be -5 instead of up in 5.
Oh, okay. Thank you. Yeah. So it went down 5. Thank you. I was wondering why my T account looked different than what it was. And this one went up 6.
Yeah.
Thank you. Okay. So I have a net of 1,000, right? So my other comprehensive income for year 1 is going to what? Have 1,000 in there. Okay. So, but I have to close my OCI each year, don't I? Just like any income statement account. So I'm going to go ahead and debit the OCI for 1,000 to close it. And I close it to accumulated OCI. And that's the balance at the end of year 1. With me so far? Okay, then I go in and I look at what happens in year 2. And in year 2, let's see if I get them right this time. Beta goes what? Up 8. Yeah. And comes down, the omega comes down 3. So what do I have? A net up here of 5?
Yeah.
Okay, so since I have a net up of 5, I'm going to do what? I'm going to go ahead and I'm going to, I know this is a little annoying that I credit it just to debit it to close it. And when I close it here, right?
Mhm.
So that's for year 2. So by the end of year 2, I've got what, 6,000 in here?
Yeah.
Okay. Okay, good. Now, year 2, okay. And what I'm going to do with year 2, because now in year 2, they are asking me, there are no expected credit losses, unrealized gain on available for sale securities on the year 2 statement of comprehensive income. And this gets a little annoying because we're going to have to deal now with the fact that we took amounts out of the OCI for the sale of that Alpha Corp security. So what I want to do with this one, because I feel that I could sit here and write all day and it's no more revealing than looking at the solution for this question. And part of my strategy here is I want you to understand something about your software for Becker too, so you can see how you can work things here as you're going through. So if you go to your Becker software, of course you sign in, and you have FAR, and you have the little magnifying glass here, okay? And you can put these final review questions in there, okay, in the search engine, and it'll give them to you. So if you get stuck while you're doing final review questions, and by the way, it's my opinion that you should work every single final review question as homework before your exam, okay? And you come over, and of course, I know already that the answer here to this one is 2000. So let's just go ahead and take a look at how we got to 2000. And they're asking what should we put on the statement of comprehensive income here. And notice we've got the 8 and the 3 up and down from the previous question that we were looking at for that 5,000. But the fact that you would have done what? That you sold the security, and we know that they sold it in year 2 because they tell me what the year 1 market value, and then they give me the sales price, and then they don't tell me the market value for year 2. That's indicating to me that they sold it in year 2. And remember that ultimately the realized gain is the difference between what you sold it for. So if they'd asked me the income statement, the answer would be 7,000. But here they want to realize that I had to take out 3,000 out of my other comprehensive income that would have been sitting in my accumulated other comprehensive income. That difference between the year 1 and the cost, that would have been sitting in there. And when I take that out, I have to net that off against the securities that I kept. And that's how we end up with that 2,000. So that one was, a little bit tougher in that you had to remember that if you sell that security, you're going to have to bring amounts out of accumulated other comprehensive income. How do amounts get out of accumulated other comprehensive income? By reporting an OCI amount that ends up getting closed, right? Okay, so you would have had to have done that part for that particular question to get the amount that's reported for that particular year. Okay. Question? Okay, good. Let's go ahead then. And I think we already looked at questions 3 and 4 there. So let's look back at the textbooks. And I can get back there because this looks kind of weird now. Okay, and go back to I guess I'm still in full screen. Okay, good. Okay, we already looked at question 4 and 5. So let's look at now investment in equity securities. And the key thing about investment in equity securities, there is no OCI impact. Remember that the OCI is limited to what? To the debt securities. So don't get stuck into the trap of thinking that you have to deal with amounts in OCI for that. Okay, everything goes through net income, fair value through net income. All right, let's look at the equity method. Okay, and remember, if the investor owns what 20% of the stock is the rule of thumb, then we're going to more than 20%, 20% or more. Okay, so as soon as we cross that 20% threshold, we use the equity method. But if it is less than 20%, we will still use the equity method if the problem tells me that they exert significant influence. Okay, so let's just go ahead and let's take a look at how we'll use that 20% threshold, okay, under the equity method. So on January 1st, Red Crown Inc. purchased 25% of Red Hand Company's outstanding common shares and 40% of Red's non-voting preferred stock. Red plans to hold the investment on a long-term basis. Red Hand reported net income of $300,000 for year 1 and paid common stock dividends of $100,000. Red Leaf reported net income of $450,000 and paid dividends of $200,000. Okay, now we want to figure out the income that they should report from these investments. And so we're going to take the $300,000, which was the net income. And what percent of the stock did we hold? 25%. And there was nothing in there to indicate that we didn't have significant influence, even though we were over the 20%, or we weren't under the 20% and they told us that they did exert significant influence. Okay, so you always got to watch that about the significant influence. But in the absence of that, use that 20% rule of thumb. And then for preferred stock, you don't take the percentage of income because it's non-voting. You don't exert significant influence based on the preferred stock. But we do get a chunk of that dividend, don't we? And that dividend income would be investment income. So it's at $200,000. And what, we own 40% of it. So that's going to be 80,000. Oops. Yeah, 80,000. You add those together, what's that, 155? Okay. Okay, good. Just wanted to look at that one. Okay, are you guys tired? Want to give up?
A little bit.
No,
Huh?
I had coffee before.
You had what? Coffee?
Yeah.
So you want to keep going? We're at 8. We're a little after 8 o'clock right now. Getting dark. Again, don't feel like, hey, John, you know, we're going to keep going because we want you to feel like we really feel like you're so entertaining here. It's not going to bother me to be laying on my couch an hour earlier.
I had a quick question.
Yeah.
About a random topic. When I was doing the final review, I was doing the foreign accounting, like remeasurement and translation.
What page?
Hold on, let me find it because I just Oh, okay. It is the financial review 3, topic E.
3, topic E. Okay, let me see if I can get to
It's
that.
like a ways down.
Okay, 3, topic A, B, C, D, E. Okay, 3, topic E. And what page? E.
E1. So I was looking back at our notes when we did like when we discussed it in class, and um
Let me see, just let me take a quick shot at trying to find it, okay? Just because we are recording and
okay.
you might want to look back at this later or something. So let me see. Let's see. The way they number this is just a little irritating. So I still need to come down. I'm sure somewhere somebody thought they were a genius when they came up with all this E, topic B, and all that. So
Yeah.
we're still topic 2, right?
No, 3.
No, I know. Yeah, we're in topic 2 right now.
Oh
Top
yeah.
3. Okay, we're getting there. Hang on.
And yeah, it's topic E of the 3rd review section.
Okay, we're to D. Let me go. I think it might be right here. Okay. All right.
Oh
So
yeah.
you're talking about down here.
Yeah.
Okay.
So yeah, for remeasurement, so I was doing one of the simulations, and um so monetary, when we're doing remeasurement, monetary items, we're using the current year-end rate, and then when it came to the income statement, non-balance sheet related items were supposed to use weighted average, and then the balance sheet related items were supposed to use historical. And
Yeah.
there was one of the questions that I was doing where I had to like fill out, it was like a really long thing, and it had like inventory and all these list of things. And I thought that for inventory we were supposed to use historical, but then I got it wrong and it said weighted
Right.
average.
Remember that on those 2 flashcards I gave you. So that's good that I think you're using those flashcards to tell you what rates to use for the different financial statement items. But I think somewhere in there I put in parentheses, inventory could use weighted average if it's acquired evenly
Oh, okay.
throughout the year. So for cost of goods sold, because it's balance sheet related, and for the item itself, inventory, if they tell you that they sell and acquire inventory evenly throughout the year, then you have to use weighted average. And that's consistent with that example where they have those 2 watermarks,
Yeah.
1 and 2. That happened in that example as well.
Oh, okay. Okay, cool. Then I probably just missed that, and that's why. Because
Yeah.
everything else I got right, and then I was confused on inventory.
Yeah, good. Those are pretty complicated problems. The problem that I have is they present that to you as like a standalone, like you're going to get a foreign currency. And I want you to kind of leave my favorite fortune cookie, Fortune says it's important to know that there's a path at the end of the road. And like that could be good news if you're trapped and you need a path to get out. But it could be bad news if you think you've done everything you have to do and then you have to go a little bit more, right? So leave some lot of space in your mind for the potential that they could ask you to do a consolidation, but they'll ask you to consolidate a foreign subsidiary into a US parent. And so before you can do the consolidation, you're going to have to do, and it depends on the nature of the description of the transaction, okay, either translation or remeasurement method to first translate or remeasure the foreign currency into the US dollar and then do the consolidation, okay?
Yeah.
And so you see something like that, and a lot of times when students panic, and my point is just bludgeon through that part where you have to turn the pounds into dollars, whatever it is, and then get on to the consolidation. So don't necessarily try to be perfect in doing that. But that upfront part would be a good practice for you for something like that. So that's good that you did well on that, because you could see it in a task-based simulation format, like what they showed you there, as part and parcel of which historically have been task-based simulations dealing with consolidation.
Okay, cool. Thank you. I couldn't find it in my note. I think I maybe missed the flashcard, but I should go back and look at the actual lecture. But like for the
When I
I
say
said yeah, sorry, go ahead.
when I say flashcards, there were two I gave you. So let me see if I can get back to let me get out of this for a second. Is my e-learning still open? No, of course
I
not,
don't have that.
because that would be too easy. Just let me get into e-learning real quick. Where's my Golden Gate? My e-learning. Yeah, it's going to take me a while to get used to this, to find my classes. Okay. And recently accessed is helpful though. And under chapter,
Oh, that was 6.
where was it? Chapter
It
6?
was 6, yeah, module 4, chapter 6.
Okay, yeah, see foreign currency, example 1, example 2. That's what I'm talking about as flashcards.
Yeah.
And I think it's example 2. And then down there at the bottom, historical rate for balance sheet related expenses like depreciation, cost of goods sold. Cost of goods sold could be weighted average. And for inventory, inventory could be weighted average. And what I should probably say to you is if it's acquired evenly throughout the year.
Right.
So this flashcard, even though it looks pretty busy, really has the key elements of what is somewhat of a, in my opinion, jagged presentation of what they do in the book itself. So
Right.
I'd be better off kind of focusing more on this.
Yeah. Okay. Oh, our grades aren't posted yet, right? For our class.
Apparently what happened, they should be posted now. Apparently what happened was there were a couple of students who never showed. So I clicked the little button that says they never showed, but you actually have to put some sort of grade designation in there for them, and I didn't do that. So it didn't post, but I got an email now that said, after I corrected that problem, that said the grades have been released. So I don't know.
It is posted. I saw my grade yesterday. So it is. Can you check yours?
But it would be on the e-learning, right? Is that where it's posted?
No. Can you show us where it's posted?
Yeah.
You want me to give you to share the screen? You don't have to show us your grades, but just show us in general where to go.
This is like my first semester. I don't know.
Yeah, On will show us, I hope. I hope she doesn't.
If you go to my GGU and you log in from my GGU, you will see some of the option e-learning, self-service, student self-service, and GGU for you and Microsoft Office, right? Click on the student self-service.
Oh, student self-service. Okay.
Yes.
Yeah, I was going to like the e-learning, the course. Okay.
No, I didn't put a lot there because for this class, it's kind of like, hey, can you share your screen? would you be willing to just show us on yours?
I found it.
You found it?
Yeah.
Okay.
Okay. Well, because I totally thought that it would be posted on e-learning and I didn't see it. And I was like, oh
Well,
my
you
God.
should theoretically be able to see what's
I
on
see.
e-learning and then see how that translates into your grade. But because we don't have like exams and whatnot, there's not a whole lot for me to put as a grade in e-learning. I'm not one that's inclined to do double work, put something in
Right.
e-learning just for the sake of putting it there, when I know at the end of the day, it's all about your participation in the class and ultimately passing the exam and stuff. I mean, my strategy is this. If you get, let's say a person got an A+ in this class, and it's a CPA exam prep class. Well, do you want to be sitting in front of a potential employer telling them how you got an A+ in a CPA prep class, but you can't pass the CPA exam? So I want most of my students to get a good grade. And now the motivation, the strategy should be, well, I want my success on the CPA exam to match that grade I got. So now I'm coming in like, walking on water. I prepped for the CPA exam. I got an A+ in the class and I passed the exam. So, the strategy there is to, in this class, the motivation in this class is to, motivate you to take the exam and do well on the exam. That's what this class is all about. You're really not doing yourself much good. You get a good grade in this class and then you can't demonstrate that you passed the exam.
Okay, cool. One like random question about exam day. So mine's in Stockton, so I'll be driving there obviously. But like on my notice to schedule, it has like, you have to bring 2 forms of ID, you have to bring your notice to schedule, which I have it all printed out, and you can't bring any belongings. But do they have, this may be like too technical, but maybe I should call the place. Do they allow us like to put our stuff somewhere?
Yeah.
Because like, oh, okay.
Yeah, but they had a locker for you. With COVID, I always, they come up with the stupidest. Look, guys, I voted for Biden. I'm not an anti-masker. I'm not an anti-vaxxer. I got my vaccine. I've got my 2. My arm is back. Okay. But some of the things that they do related to COVID is just like, what? Like I had gone to take a trip because I was doing a little house hunting out of the area, and I wanted to run on the treadmill at the hotel gym, and they said I had to wear a mask while I ran. And I'm like, okay, guys, running is all about expelling the CO2 and taking in oxygen more deeply. And if I put a mask on, how am I supposed to accomplish that goal? And all of a sudden I become one of these, I guess Kevins or Karens or whatever. I'm standing in the middle of the gym yelling at them about not wearing a mask. So, some of the things they do are a little bit weird, I think, sometimes. Having said all that, in the past, I would be able to affirmatively, absolutely tell you that they'll give you a locker. I don't see why COVID would change that, but yeah, you better check with them. But they're supposed to give you a locker. In the past, they give you.
Because I mean, I have like a phone and keys and my 2 forms of ID and stuff. So I know like they have a whole list of things you're not allowed to bring like into the testing center. But
yeah,
I don't want to leave any of that in my car because then it could get stolen.
Yeah, well, I think they give you a locker for things like your keys and stuff. Okay, you can put your books and stuff in your trunk, I guess.
Yeah.
I don't think you should bring your flashcards.
Yeah.
What time is the exam?
12:30.
Okay, so you shouldn't hit any Stockton traffic at that time, but be careful of that. If it's a Friday.
No, it's a Monday.
Okay, all right, well, be careful because sometimes I can't explain to you why all of a sudden there's been a traffic jam on 580 east towards Stockton. Because a lot of people, although it's not as bad now with COVID, but a lot of people work in the Bay Area and live there because the housing prices are so much better, and you get stuck If you're hitting that 3 o'clock or later, forget about it.
Yeah,
That
I mean,
is
I'm planning to get there like at least 2 hours early so that I can just go through my stuff again. But
okay.
Yeah.
Okay.
man. Okay, cool.
All right. Anything else, Ann?
Oh, sorry. I'm gonna miss your first class on the 10th.
Yeah, the first class for audit is the introduction
Yeah,
class. You won't miss anything.
I mean, yeah, because I don't think I'll make it back by then. But I mean, maybe.
Don't worry about it. Just go to bed when you come home or relax, whatever, because we're just going over how to register for the exam and that kind of stuff. So.
Okay, cool. Sounds good. I don't want to just go.
Good luck
And-
to you.
Oh, thank you.
No, I say good luck.
Oh, thank you. Thank you.
Okay, guys, if there's nothing else, then I apologize. We can't get through all of the final review, but we're just crunched through. But hopefully some of this stuff was helpful and you kind of take away, obviously, the content of the material that we talked about, but how to use the final review and prep it too.
Right. Yes. Thank you.
All right, guys. Have a good night. Thank you for your patience. We'll
Thank
see you. Good
you.
luck with everything.
Thanks. Good luck.
All right.
Thank you. I'll see you next class.
Yes.
Okay. We'll see you next class.
Have a good night.
Good night.